that euro sell-off thingy I was on about. Well, we had Dragh'd today, and he did what the central bankers do, and that is tax everybody who's in his currency by devaluing it, making their living costs go up, and dragging them into higher tax brackets when they need to be paid more just to have the same quality of living. And that's the nature of the game of the control structure. But less about that and more about the technical elements. We have been suggesting that you wanted a short run about 118s. I actually got put in, but I didn't like that candle, so I got straight out with a little bit of a pump and on that candle, but it subsequently then turned rather nasty once he began speaking, and then sell. And I was actually a little bit hopeful that it wouldn't run this low, because I'd like it to have a little bit of a rally. I still think that's going to happen. We want an inverted HVF, we want a low one, and we want a low two, but it has run that. So I'm expecting a return move, maybe because of the necklines. We've got two necklines of our macro head and shoulders, let him say so clearly, and that of course is the target from the smaller one with HVF method head and shoulders. You'll have to do a course to find out more about that. Go to the website to learn. And similarly for the bigger head and shoulders, where we often have some form of HVF structure on the left shoulder and then an inverted on the right. We didn't get the idealized inverted for us on the right and then, but we certainly got bearish structure. You can see how it was coming up until then. So this is your bull climb. It goes on for a long way before there. We call for 113 to be run as our target, and we're feeling relatively chipper after today for that. So early entries could have been taken around about the 118 mark, certainly a little bit later when you could see the selling coming in as Dragh'd was speaking at the 117. These lines no longer hold because we didn't get quite what we were wanting, but we were scenario casting for exactly that. If you want to find out what we mean or do by that, once again, go educate yourself on HVF method by making a turn at our website and finding out how to do that. But yeah, big sell-off day, so quite a few points in it. At one point 118.38, now trading 116.68. That's the better part of 220 pips already in a single day. And I think the best is still to come, but it's possible that we get a little bit of a rally back to the neckline. It broke from really high up. So often you get that, what I call a second chance or a revisit. So having run that marginally lower low, you might just trip in the support and resistance traders and then rally a little bit. I don't think it'll be a powerful rally. It could be like a bear flag. This is also just a scenario. I'm not saying it needs to happen. I'm saying it's quite common and possible. So it'll have no great zip in the can. Could be a rising wedge, could be a number of pattern structures. So it could be like that, or it could be like that, and then an attempt to make a return move here, followed by the second stage sell-off, which is often the best, but given how well this sold off, it's not for us to say. So target down to 113 comes from the geometry of the head and shoulders. That's that head down to the HVF method neckline with the left shoulder and the right shoulder over here. And you'll learn all about how we do our head and shoulders in far greater detail on a program. So yeah, looking for the 113, and we have now left the 118s most decidedly. I'm not sure we're seeing them again before we've made a whole bunch lower move on the price. So Euro USD, I am the market sniper. This is an FX update on the big one, the Euro USD. I hope you value it, and as I say once again, go and find your way over to points where we talk about our methodology and our products and information on our website should you choose. So there is the homepage, and there of course is the products page. See you then soon, and thank you for watching. If you like and rate, it's appreciated if it is merited.